Hi, I'm Reid Kirchenbauer with InvestAsian.com. I run a business helping people invest in emerging Asia. But oftentimes clients will tell me, well, Reid, I'm already investing in emerging markets. I own shares of an ETF from iShares or Fidelity or Vanguard or another one of these large companies. I'm here to tell you why often investing in an emerging markets ETF is a bad idea. You're watching Nomad Capitalist. Emerging market ETFs and funds have become extremely popular over the past decade. Some of them have well over $1 billion worth of management. Large, reputable institutions from Vanguard to Fidelity to Charles Schwab and many others have their own form of an emerging markets ETF. So why am I here in Cambodia telling you that an emerging markets ETF is a bad idea? Well, there's two main reasons. First off, emerging market ETFs don't even invest in their namesake usually. Yes, that's right. Emerging market ETFs often don't invest in emerging markets, at least not fully. Now, if you go to one of the websites of Fidelity or another one of these large companies, you can look at what percentage of holdings they invest in per country. You can see, okay, what percentage of this ETF invests in China, what percentage invests in Brazil. You can look up the countries that these ETFs invest in. But for practically every single one of these funds, you'll find that they don't invest in emerging markets. They invest in places like Qatar, Dubai, South Korea, Taiwan. None of those are emerging markets. They're in many cases, some of the most developed economies in the entire world. South Korea stopped being an emerging market about 20 years ago. Yet, you'll often find that 40, 50, even more than half of these funds' holdings invest in countries that you would be hard-pressed to call an emerging market. I know for a fact that if you go in and look at the holdings of the Fidelity iShares Emerging Market ETF, the largest of its type in the entire world with billions under management, you can see that largely they don't invest in emerging markets. They invest in, they're big fans of South Korea and Taiwan, for example. About 30–40% of their holdings are in China. They invest in Brazil. Of course, Brazil and China are emerging markets, but South Korea, Taiwan, these are among the most developed economies in the entire world. South Korea stopped becoming an emerging market well over 2 decades ago. So are these countries emerging markets? Are you really getting the exposure that you're looking for by investing in an emerging markets ETF? Probably not. Now, I don't want to say that you won't make money with an emerging markets ETF. Emerging markets ETFs have done rather well in the past. They might perform well in the future. No promises obviously can be made, but if you're looking for emerging markets exposure and exposure to countries that are truly emerging markets, you might be better off with another option.
How can Nomad Capitalist help you? 4 ways. Number 1, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number 2, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number 3, if you're not sure where to start, but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number 4, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.